Hey guys, welcome back to another episode of Market Mastery. Got a quick video here for you because we have a very important week coming up that could give us a strong signal as to how fast this bear market, or particularly the accumulation range that we're in at the moment, could be finishing up. And that obviously is the FOMC that is on Wednesday, 2nd of November, coming up. Now, there's a lot of speculation that we'll probably see a 75 basis point hike, which I think is pretty likely. With that happening, though, the main thing to watch out for is how dovish, aka bullish, is the Fed going to come out and talk, particularly Jerome Powell. How bullish or dovish is he going to talk at the meeting? That will have the biggest sway on the markets, not just the hike, because I'm pretty sure pretty much everybody is expecting a 75 basis point hike, right? So unless they do a 50, the market should probably have a non-reaction, or, there will be some reaction, but it won't be a big dump because there's a 75, right? If they do 50, I think it'll probably be a pump because it's showing that they're starting to hike at a slower rate already. I think that's unlikely though. So we don't need to worry about that too much. But more importantly is about what he talks about. Are we closer to, getting to a pause? Are we closer to starting to slow down rate hikes so we can give a little bit of breathing room to the rest of the world? And all the political pressure that they're copying at the moment. The other thing to think about as well is next week, I'm pretty sure it's the 8th of November, we have midterm elections as well, which is also historically known to be to put a bottom in markets and can be a reversal point of a downtrend as well, right? So pretty interesting next couple of weeks coming up. So we have the FOMC on the 2nd of November. Then we have midterm elections on the 8th. And then December 13th, 14th, we have another FOMC. And in between that as well, we're going to have a CPI. Just let me refresh this. We'll have CPI on November the 10th as well. That's going to be right after the midterm elections as well. So there's a lot of potential things coming up at the moment in the market, which could cause a reversal or could cause some volatility, or at least give us the fuel that we need for a bit of a bear market rally. Now, we've got the weekly close coming in, which, to be honest, I'm not loving too much because we're actually getting rejected from this weekly order block. So this is daily. Had a little bit of an SFP just here, right? And pulling back today, along with the stock market that just opened, had an initial dump on the open here, right? Nothing to get too excited about because all the action that is important happens when the actual spot stock market opens. And as you can see here, it's still closed at the moment. We have some beautiful price action here over the last couple of weeks with this inverse head and shoulders, pulled back to the range high, right? We were talking about in the video the other day, either a pullback to this level here, or potentially it could go even to this level here and bounce off. I would be fine with either. We came out, had PCE inflation come out lower than expected on Friday, and that gave us a really nice rally up through here. The other one as well to watch out for at the moment is we do have this really nice inverse head and shoulders set up on the NASDAQ as well, which has pushed back up to its resistance level. So watching this week to see if this neckline here on the NASDAQ, 11,672, does get broken or not, because if that does, then we're expecting a rally at least up to the downtrend resistance through here, right? Let's get our Fibonacci out as well, right? And our 1-to-1 puts us at 13. Now, I'm not sure if we're going to get up to there, but I think the 0.618 will most likely get hit, and that's at 12,500. If that does break out and gets bullish, we will need a dovish Fed on 2nd of November. Dovish, for all you guys who are sort of new to Fed speak, means lowering more leniently towards lowering interest rates rather than hiking, right? So looser monetary policy rather than tightening. Tightening is taking liquidity out of the markets and putting interest rates up. Loosening monetary policy is putting liquidity back into the markets and raising interest rates, right? So loosening is taking money. You guys know what I mean. Anyway, let's move on. Junk bonds. is one thing that I wanted to quickly talk about as well, because we are also having a inverse head and shoulders here at the moment as well. And the market is starting to push through here and broke to the upside the other day. We were watching this set up through here, and this broke out to the upside quite aggressively. So that tells us that the market is actually expecting bonds to start going up, which means the bond yields that have been absolutely destroying the market of risk assets anyway are going to start coming back down, most likely, as people start to buy bonds again. What happens is these yields start to come back down, right? And a good indication of that is looking for a bottom on the junk bond index. Now, not only have we reclaimed, not only have we had inverse head and shoulders get put in and break to the upside, we've also reclaimed the lows put in on the selling climax, what we saw in the stock market 14th of June as well, right? So we had a nice breakout of this neckline here and pushing to the upside. So this is going to be one to watch this week as well to see how that plays out. So inverse head and shoulders is a really good bottom indicator that we could be on for a higher time frame reversal, especially when we get one set up on the daily. But I just want to show you guys what the weekly chart of this, the last weekly candle was very, very strong on the breakthrough and the reclaim of the lows back here. And that just looks absolutely beautiful here. We can see on the daily time frame as well that we got mammoth volume through here just as we broke out and started to push on Friday. That is absolutely massive volume, the most volume that we had since the selling climax by far, and it wasn't too far off actually. So that's a really strong indication that the entire economy, or I should say the entire economy, I should say that it does affect the economy because this is money going into companies basically. But the entire marketplace, I should say, and the traders especially are moving back into a more of a risk-on phase in the market. Now, this sort of reminds me of, the price action that we saw back here when we got that first bear market rally. So that's something to sort of take note of. And, we can sort of do a little bit of TA on this and see what we can get out of it. Nothing too amazing, to be honest, but on the trend line, this could definitely push up to here or go even higher. But at the moment, just got to wait to see how much appetite there is for risk at the moment in the junk bond market. I think it's definitely an important one to watch because if this just rolls over and starts to sell off again, it gives us an idea that, probably the smarter hands in the market are moving back into risk off again because they think that the Fed are going to continue to raise interest rates. You see this sort of market action on, bonds when the Fed are, when the smarter people in the room, because they're the people that buy these different types of bonds, right? Expecting a pivot from the Fed to, maybe not hike as much and start to lower the rate that they hike or even come to a pause sooner than the general retail market is sort of expecting, which is everybody's expecting the hikes to go on until mid next year and inflation to not come down, and panic is across the board everywhere, and everybody's extremely short and everybody's extremely bearish, and they're opening themselves up, right, to some nasty price action and liquidations to the short side as well. Just going to have a quick look at OBV if it will load in. Where is the line? So one little trick as well for unbalanced volume that I use sometimes in ranges like this to see when we're breaking out is a break of the OBV of the trend, which we have. I mean, it's not the most amazing trend line, right? You probably could... Not really even through there, but a little bit of a breakout of the trend here. The OBV can sometimes give us a signal that we're ready for a bit more of a rally. Now, the thing that is worrying me the most on the Bitcoin chart, was looking at this weekly here, is we're closing below this key weekly order block. We've got an hour left. It looks like it's going to close below here, which isn't really great. We wanted to see this weekly sort of push through and close above that. That doesn't mean that we aren't going to get a candle like this in the coming week. which is really what we need to see here. We don't want to see a red candle that ends up coming back and closing like that, right? We don't want to see something that looks like that this week. So really need to see this coming week to break back above this weekly order block. And that I think will definitely happen with the dovish Fed on FOMC on Wednesday, sorry. So if we can break through, then I'm looking back for these highs again, about 24,500 for BTC, and then we'll have to see what it does into there, right? So this line out here, this green line, is the log scale chart for the downtrend, which is the major one that we need to break out of. If this is the accumulation range, this could just be another rally up here, roll over one more time, and then sort of go from there. So not super excited that this is 100% the bottom or anything like that through here. We still have a lot of proving to do. At the moment, just looking at this as a range in itself, especially, I think it's more of like a low time frame range. It looks really nice through here. You know, we had basically a lot of testing of this daily range low levels through here, right? This whole space through here was, you know, a lot of wicks down into here. And every time we came down at this level, it sort of came straight back up. So there was a lot of buying in this area, I think, by the smarter operators in the room, and a lot of panic selling as well into the stronger hands that accumulated below 19K. Every time we came below 19K for almost, actually over a month, the market brought it back up almost instantly, right? And even with very high volume, like on this one here. So for me, it would make sense that, you know, those players that were doing all the buying through here, they're not just going to start taking profit and dumping on everybody after a 10% move. They're going to want to push this up a little bit higher. And I would expect at least 22 or even back to the range higher would make the most sense to me. So just looking at this as in a range in itself, right, going sideways, this is sort of a spring action through here. We didn't get a full SFP of this selling, one of the selling climax actions through here. But it came pretty close to sweeping out all of the levels through here. There was only one wick that didn't take, right? So that's, to me, is a spring, especially because we pushed up quite aggressively afterwards. And this was also a spring of bad news as well, guys, which is very interesting. So bad news, everyone capitulated and dumped into someone who had very strong hands, bought like crazy, pushed the market back up. Obviously, that happened on the stock market as well, and BTC followed. We came back down, really nice retest here, and now we've broken out of this minor downtrend through here, which is still significant though, and had a nice little push. So this is now what we sort of look at as our sign of strength rally through here. We're having, you know, a little bit of what they call backup action, right? So sort of back up into the range high. Sometimes you can come a little bit below the range highs like we have through here, but what we want to see is this 4-hour order block through here. We want to see this hold as support and form some sort of a bull flag, right? And do something like this, then break out to the upside of that, right? So, you know, we can get out our Fibonacci's and have a look at this, and then the targets. If you wanted to take this as a trade just in itself, right, be looking for entry through the flag through here, and then, you know, first take profit if you wanted to, but I'd be more looking for the 618 and the 1-to-1 extension through here for a leverage trade, right? I have started to add as well on my on spot through here as well. I just thought it was too obvious, anything below 19K. So this daily price action through here, this daily bull hammer, I bought pretty heavily on this, and it's paid off quite nicely already. So we'll see what happens over the next couple of days. It could be a little bit slow, which I'm thinking that, you know, potentially if the stock market is slow moving into FOMC because everybody's awaiting Powell to come out and do something, it could be quite easy for BTC just to go move sideways for a little bit. And then, you know, on the Wednesday, we have a little bit of more bullish price action and break out the top of this if things get exciting on Wednesday anyway. So back to this chart here. Right, so we had that daily through here, which I thought was a really nice key level that we had a pin bar off, so couldn't ignore that and got long off that for moved USD capital across into Bitcoin as holding capital for my leverage trading account. And we've pushed quite nicely since then, right? But one of the other things that I watch as well is the 12 and 21 exponential moving average crossover, right? So we've had a crossover in that, and usually when we get a crossover on the daily in this, we get pretty nice moves off that, right? So back here, got a decent little move off it. Obviously, there was a pretty choppy and pulled back, but after the crossover, there was still a 10% move, even though that was quite aggressive, right? So after the crossover, if we take it from here, right, a 10% move takes us at least up here. If you go back and back test this, it does give very nice entries even throughout the bear market. But when you flip across into a more bullish market, it gives unbelievable entries, and you can hold them for quite a long time, right? So just a couple of examples there on nice 30% moves twice. So yeah, when this crosses over, I like to add move more capital out of USD across into holding BTC, right? So more of a risk on play. The other thing as well that we've been looking at recently is this weekly bullish divergence as well, right? So if you haven't been watching my last few videos, I've been talking about this a fair amount, right? Weekly bullish divergence. And we also had a weekly Morningstar reversal through here as well, with big wicks to upside, but still it's there. So you need to pay attention to that, because a lot of the time they do put in bottoms, right? And obviously this lined up with the reversal indicator of the weekly bullish divergence on the stock market as well. So definitely a fair bit happening. The ETH trade last week was really beautiful as well. Really nice accumulation range, and has pushed more aggressively to the upside. Now, I'm sort of looking for, a bit more of a pullback on Ethereum, and going to try and get back in somewhere around here. I'd love to see some sort of a bull flag action here, and then an attempt to break out of this long-term downtrend through here would be pretty nice for Ethereum, right? So looking for that over the next couple of days on Ethereum. And I'm going to be basing some of my holding capital. Usually I only hold Bitcoin as my trading capital, but I'm going to be putting a larger percentage this cycle into Ethereum, because especially on this last move that we had, Ethereum has really outpaced Bitcoin. And I think a lot of that has to do with the post-merge lack of supply into the market for Ethereum, because everybody is now staking. There's no mining anymore. So there's not that selling pressure from miners anymore. So I think for me anyway, holding a larger chunk of Ethereum this cycle, because I think it will outperform BTC, at least at the start of the cycle anyway, as the market sort of, finds a new equilibrium of price where there's enough sellers, so there's enough supply at that level. I think it's probably unequalized to the downside at the moment. So when we do get bullish action, I do think that Ethereum needs to have a couple of pretty strong pumps, and I think it will gain some ground against Bitcoin. We have been in this really strong bull flag through here for pretty much over a year, right? Let's have a quick look. Yeah, almost 2 years now. And so this could easily push back up to the 0.11 and even go back up to see new all-time highs. So we haven't been up to since 2017. When the flipping was sort of on the cards. I don't know if Ethereum's going to flip Bitcoin, but I think definitely we could see highs not seen since 2017. That is for sure on ETH BTC. And that's mainly just based on the lack of supply coming into the market, which will eventually come back once there's enough people who are holding Ethereum at higher prices. They become more willing sellers, right? So that's just something to think about. That I don't think that's going to play out as a strong trade forever, but I think it's going to be there at least in the short term and at the start of the cycle. So that's one thing to take note of as well, I think, coming up. So this is the main thing I'm looking for at the moment. If we do have a more hawkish update from Jerome Powell on Wednesday, I think this rolls straight back over and we go back to the lows. And same thing with the SPX. So the main thing that we're watching at the moment on SPX, right? If you guys remember a couple of weeks ago, if you've been following my videos, when we started to have this push up through here, I said the target for me was going to be at this level up here. Came back down, rolled over after the Saudis basically came out and sort of nuked the market when they started to put the squeeze on oil supply, right? We came back down to the lows, and then the bearish update the bad news that we got from CPI down here, and then look at the response the market gave on very, very strong volume. And this sort of indicated to me that there's potential, at least a local bottom in the market, and we've just been going into an uptrend ever since. So you can see pushed up, came back down, retested the lows, made a higher high, higher low, higher high, higher low, higher high. Right, so now we're at that level I was talking about, this key level, right? We didn't go straight there. Obviously, took a bit of the scenic route to get there, but now we're at that key level, right? So now it's very important to see what the market does. This was the rejection point and strong weekly resistance that when we flipped into support was when the market really pushed out very, very aggressively to the upside, which ended up overextending in my opinion. But we will see what ends up happening through here. I think this is probably going to go sideways for the first couple of days, and maybe if we really do need a good FOMC update for this to pump the upside, in my opinion, break out there and then push the upside through here, maybe do something like this. And then, depending on what happens in the rest of November and December at Fed updates and also inflation readings, we either roll over or this becomes the low, and we could go on for a bit more of an extended rally into the early part of next year until, if the Fed doesn't pull off the soft landing, all of the companies and businesses start having to have layoffs. And then because earnings are dropping, obviously we got bad earnings for the first time, which is making me think that until that's sort of cleared up, making me think that this is potentially just another bear market rally. But I'd still want to be positioned just in case it is the bottom, especially for crypto as well. I still want to be strongly positioned. Don't want to be, messing around up here thinking I've missed it and then having to try and buy in late just for it to roll over. Much rather get in through the lows like we did all through over the last week or so, right? On crypto, getting in through here, right? Because if the stock market rallies and we get back up here, I don't want to be panicking, thinking I've missed the bottom and then buy in as I get, faked out to the upside and then get caught offside and stopped out multiple times on the way back down, right? So we want to be strong in position through here like we have been. If this does end up being just another bear market rally, and it'll become very obvious, because what will happen is we're going to next shift into next phase of the bear market, where all the companies' earnings start to get really bad or worse than what they were the other day in tech. Because at the moment, tech is taking a bit of a beating, but the rest of the economy seems to be doing all right, holding us up. So it's not too bad, just a lot of the big names in tech and shipping, right? Amazon, I guess you can call a shipping tech company. Took a bit of a beating, right? So what will happen in the next phase is we'll get more companies starting to report bad earnings, and then we'll start to report more layoffs, and then we'll see unemployment go up. If unemployment starts to go up and the Fed doesn't step in by lowering interest rates and adding quantitative easing, which I think they will hold off for a little bit, to not to lose credibility, we could roll over and see new lows if that sort of starts happening into the start of Q1, Q2 next year. So cannot rule out over the next 6 months this sort of price action, right? We come up, make a new high, sort of waft around through here for a little bit, and then roll over, right? Make new lows, right? Sort of fake everybody out, and then we sort of recover from there, and then we finally go back into an uptrend in Q3, Q4 next year. So that's something to think about as well. Obviously, I'm just freehand drawing that picture. Don't take too much from it, but you get the gist, a bit more of an extended rally here. And then if the economy does start to crash, unemployment does start to go up and the Fed is slow to respond again, we could see, another rollover, and we sort of have a double dip and then recover from there, and we go back into a bull market. But I do think we are getting a lot closer to the end than most people realize, which is why I want to have strong positions. Once we get, the evidence that the economy is really starting to hurt and unemployment is starting to go up, more earnings reports come out negative, then, we can start to look to take off capital and wait for the Fed's response to that. If they start to dish out QE straight away, then we just want to be holding long and strong and looking for more and more upside. And the other thing as well, apart from junk bonds, is another chart to look at: the overnight reverse repurchasing agreements, or the reverse repo market, because Arthur Hayes has been talking about this a fair bit recently, and there's some weird stuff going on at the moment with the dollar reserve the back channels that they have to get dollars to other countries, and what's happening in Japan at the moment with Japanese foreign ministry coming out basically saying that they're working with the US Treasury to get the price of the yen back up and bring the dollar down. And then the US Treasury came out and said, we don't know what you're talking about. Arthur's saying that what they're doing basically at the moment is they're starting to reuse the reverse repo account and put some of this to what was 2.4 trillion. They're starting to put some of this back into the market, right? We can see that this really started aggressively in April 21, right? And the market has fared pretty badly since this really started to take off, right? So if this starts to get pushed back into the economy, it's basically the same as stimulus. So this is a good one to watch. If you want to know more about it, I can't explain it all in just a couple of seconds. I tried to do my best. Hopefully that helps. Go and have a look at Arthur's posts. He put it up, some very high detail posts about this on Twitter and in his latest blog, so you can go and read those. But he's saying that he believes that they're going to start moving this, what's now $2.2 trillion of essentially dead money, he calls it, back into the economy, which has the same effect as stimulus on the economy, but it's a way that they can do it without calling it stimulus, and it will go straight into risk assets. So basically adding liquidity back into the market, which is, your market is starved of liquidity at the moment. That's why price of everything is going down. So it's a way that they can prop up the market, help all our risk assets start to go back up again without them getting scrutinized by the public or the layman's man that doesn't really understand what's going on. So that's pretty much it for today's episode. Thanks a lot for tuning in, guys. If my video helped you out in any way, shape, or form, please share it with your friends. Give us a like. Drop a comment down below if you have any questions. And don't forget to subscribe. Thanks a lot for tuning in, and we'll chat to you guys soon.